We were asked about 2 years ago by the Department of Commerce to lead a new innovation track underneath the Strategic and Commercial Dialogue. The SNCD, as a lot of you know, is the highest level annual dialogue between the U.S. and India, involving the U.S. Secretary of State and Secretary of Commerce and their counterparts in India, the Minister of Commerce and the Minister of External Affairs. Recognizing Prime Minister Modi's attempts to develop a stronger ecosystem for entrepreneurship, they thought, why don't we build out an innovation track underneath the SNCD? The United States has an innovation economy that really is kind of the marvel of the world. Many countries want to emulate Silicon Valley, Boston, the various hubs. It's a difficult thing to convey. How do you recreate these kind of unique wonders that we've got? But still, if you look at it from the ground up, there are individual institutions that make up these ecosystems. Can we convey some of the learnings that we've got from that, the incubators, the accelerators, the universities, the mentor networks, things like that? So we're just coming from a roundtable that we had just had upstairs, exploring some ideas that we could submit to the government underneath this innovation track. And one way that we're going about it is by organizing sector-focused conversations. We did one on healthcare a while ago. You remember the healthcare event that we had in November, the way that technology helps humanitarian relief. Today we're looking at financial inclusion. And the topic itself couldn't be more timely. So many big things happening in India. A major thrust priority of the Modi government to increase financial inclusion, demonetization and what impact that's had on financial inclusion. We're pleased to have on stage here today three distinguished speakers, fourth to join shortly. First to my left is Ms. Preeti Sinha. Preeti is the Senior President of Yes Bank and the Global Convener of the Yes Global Institute. Previous to joining Yes Bank, Senior Performance Lead at the African Development Bank, also development experience at the World Economic Forum, and 15 years in banking with many global majors we'd all recognize. To her left is Mr. Ashwini Kumar Tiwari, who's the country head of U.S. operations at the State Bank of India, India's largest bank. Took over the U.S. operation earlier this year, and before that was experience in Hong Kong and China, as he was telling me before. So good experience, not just in U.S. and India, but actually other markets as well. To my right, Sam Schuth, who's Director of Research at Intermedia. Intermedia is doing some fantastic work looking at financial inclusion in India and demonetization, which I'm glad he's able to join us and talk about. He joined the research team in Intermedia a year ago and has experience on the ground across the Middle East and South Asia, so a rich value of experiences that he brings to the table. So first let me turn to Preeti Sinha, one of India's newest banks, fastest growing private banks, and head of a global institute with so many interesting things that you're doing separately apart from the banking operation. So thanks for being here. Thanks for coming from Delhi, and great to see you. The microphone is yours, Preeti.
All right. Okay. Well, thank you very much for all of you to be here, and I'd love to have interactions with you. So I'm based in New Delhi, and as Rick mentioned, I'd love to tell you more about what's going on in India. One, of course, in general, you know about the Aadhaar card. But just to make the fact that it's only the 12th sort of application that's reached 1 billion users. So that's a big figure. And then also just to lay the groundwork on the Jan Dhan Aadhaar Mobile JAM, Trinity as they call it. So since that was launched 3 years ago, 280 million accounts have been opened. So banking, the unbanked, the movement is on. So within that context, we have a couple of us here, but Yes Bank is a private sector bank, and it's in 13 years, we're proud to be the 4th largest bank in India. And it was started on an entrepreneurial basis by Mr. Rana Kapoor, who's the CEO. And so we consider ourselves as professional entrepreneurs. And we're very glad to see this whole entrepreneurship wave hitting India right now, whether it's in the social entrepreneurship, the fintech entrepreneurs, or in any other field. So I think that's the wave, that's the excitement I'd like to convey today and connect with you on that. That's just amazing right now. In terms of financial inclusion, as I said, the bank's about 13 years old, 10 billion in market cap now, and sort of capturing the vibrancy of emerging markets. And then 2 years ago, I went back. I've had a number of experiences. So we set up the think tank to catalyze private capital towards development. And financial inclusion is one of the pillars of the think tank, which existed earlier. So over the 13 years, it's moved from, doing things like self-help groups, micro ATMs, women's livelihood enhancement programs, to now being seamlessly joined with digital banking. So right now, I was just mentioning in the roundtable, I'm sort of, repeating some of my comments, but the point is that digital banking is the hottest thing going on right now in the banking sector, the fintech side. So we also have launched a fintech accelerator. As a bank, we're able to support a lot of people coming up with new applications, and all this is going to be very seamless. So basically what I'd like you to keep in mind is the connectivity between fintech and financial inclusion and how these will help solve problems. So some of the areas we talked about in the morning were like the women, access to women, gender financing, and at this point I'd like to recognize Mr. Arun Sharma is here from the IFC. So, one of the facilities we have is from them, along with, the 10,000 Women's Program and OPIC also now, on a facility, a line of credit to us to loan onwards to women SMEs. So, we talked about this access to capital for women entrepreneurs. And then, so this is a facility, so we're very proud of that. So that's one of the things we were doing. And so I think just leaving that focused on entrepreneurs and technology, and maybe coming back to how that can help solve some of the issues here. Yeah. Thank you.
Of course, as I mentioned, State Bank of India, the largest bank in India, also the first to set up operations in the United States, and the head of those operations, Ashwini. Great to have you down from New York. Thanks so much for coming.
Thank you, Rick. Just a very quick introduction about SBI. I see a lot of people here already know it, but just for the record's sake. It is the largest bank with a 210-year-old history. We merged five of our associates on the 1st of April this year, so we are now 540-odd billion bank, and therefore we are now in the top 50. We have close to 24,000 branches and 60,000-odd ATMs in India. We also have branches abroad, of which the United States has 3. So SBI is there in all financial sectors of India, and not only banking, but also in insurance, also both life in general, also in asset management, all financial fields which are there, SBI is present. Now, coming on to the financial inclusion piece, as you are aware, the last 3 years, starting from 2014 onwards, the present government went in for a massive account opening drive. This was called the Jan Dhan Yojana. PM Jan Dhan Yojana, Prime Minister Jan Dhan Yojana, and there the accounts were opened for every household. So from a figure of about 62% in 2011, that is the number of households which had accounts, this figure has now gone up to 99% as a result of all this activity over the last 2 years. Close to about, as Preeti mentioned, close to about 300-odd million accounts have been opened, and out of which SBI alone has opened about 85 million accounts. Now, not only are the accounts being opened, also along with the accounts, there is a micro insurance which is being piloted for each of the households. There is a health insurance which is being piloted. The cost of micro insurance is as low as about $30 to $40 a year. And for the health insurance, it is as low as less than $1 per annum. The coverage, of course, is not as large. Coverage is low, but by Indian standards, about 2 lakh or 200,000 Indian rupees, equivalent to about $3,100. So from the Indian context, with insurance coverage of 4%, this is a massive amount, numbers which are being covered. Similarly, there is also, apart from insurance, there is a saving element involved, there is an investment element involved, so it's a massive exercise. Now, having done this, the need of the hour now is to fine-tune this. The accounts have been opened, but as we learned today in the roundtable before this, maybe the households, the account opening or the account running is in the hands of males who are not actually sharing the benefits with the lady of the house, and thereby the subsidy which is coming in from the government may not be properly used. So can we do something to fine-tune it and see that if the lady of the house also gets a separate account within that household? Because one of the things which came up, the digital savviness, I mean, a lot of it is riding on digital, but as we learned from some of the researchers, some of the people who have worked on the field, that the ladies are not so digitally savvy initially. They need hand-holding, and for hand-holding, they probably need a lady agent who can guide them through the process rather than a male who comes in and says, let me do this for you. So that kind of fine-tuning is required now. I will recommend to my own bank about hiring more agents on the ground because most of these accounts were opened through agents. And also, as a general policy in the bank level forums, we would recommend this to be incorporated. And we're looking for such ideas. On the technology side, a whole lot of this has been done on mobile. Now in India, almost 700 to 800 million out of 1.2 billion population has mobiles, some of them more than one. Now, this definitely, therefore, should be the basic piece in financial inclusion in terms of how can we make payments through mobile. And it has already been done. A lot of it has been started. Various platforms are there, mobile to mobile, whether cards which ride on mobile. So these are all being tried out, worked on. But of course, there is always need for improvement. Fintechs can come in here, make the experience more seamless, more easy for transactions to take place. Currently, the experimentation is still on. There are technologies which are already being implemented whereby somebody who has an account can transfer money to somebody who doesn't, and he can withdraw it from an ATM, or he can go to a shop which has a small POS machine and just take a small value payment. So those kind of things are being tried. But here, I would think that fintechs have a huge role to play in terms of making this process better, less costly. For example, one of the things we discussed today was that most of the applications being developed are for the smartphones, not for the feature phones, which still form about majority of the phones in India, especially in the rural areas. So for those feature phones or the earlier versions of phones like Nokia 3310 kind of phones, can we have applications built around them and working for them, and thereby making it more easy for those guys to have for the banking facilities on those phones? So there are multiple ideas. It's a vast country. It has large number of people, very different strata, socially, financially, all kinds. And therefore, what can we do to serve all of these together? One of the initiatives which State Bank of India has taken is to partner with companies like Amazon, companies like Uber, and finance their people who sell on Amazon. If they have a certain track which Amazon tells us, we would finance that guy online. There's no physical interface involved at all. So the KYC and all will be certified kind of by Amazon itself. Similarly for Uber drivers, we would depend on Uber for their KYC, for their certification of the credit worthiness, give the finance online, and as and when there is some difficulty or default, that company would help us to kind of recover. Now these are still in the initial stage, in the sense that this needs a massive scaling up. And one of the ways, if this online marketplace gets our finance and gets various other supporting by branding of these small sellers, this, I think, in my view, for a country like India would be a massive financial inclusion itself, rather than just transferring some grant or some subsidy to people who are below poverty line. If we allow them to sell online, give them a huge market at a less cost, I think that would something which would develop entrepreneurship in India and take it much forward. Thank you.
Well, Sam, we just ran across your great work a few days ago, and we immediately demanded you come on stage if you had the time, because fascinating to see what's been happening. So very much look forward to your presentation. Thanks for coming today.
Thanks a lot for that. Yeah, so you all get to basically have the first look at some very new research that we just got back from the field like in the last week or so. We finally finished with this data. So I'm with Intermedia, which is a nonprofit research firm here in Washington. We implement the Financial Inclusion Insights program for the Bill and Melinda Gates Foundation, which involves annual tracking surveys that are done in 8 countries, India being one of them, and the largest survey that we do annually. And we launched this thing in the fall, and we were actually in the field collecting data on November 8th when demonetization suddenly happened, right? So this created a lot of issues, just logistically, actually getting all of these people out into every part of India to do interviews. But it also kind of gave us a great, opportunity to really to go back into the field and recontact respondents who we had interviewed right before the demonetization event happened, right? So we took the opportunity to do a targeted study and go back. Let me see if this is working. Okay, and go back into the field. So finclusion.org, right, is where this study will be published in the next, probably in a few weeks from now. We're actually kind of fleshing it out. This is just really a preliminary look at it. But just to give you an idea about what the FII, Financial Inclusion Insights Program, is, right? This is a demand-side consumer survey that provides nationally representative statistics on financial inclusion and reported in a particular kind of definition of financial inclusion, because there are several different kind of definitions out there. And so this is a public good that's provided by the Gates Foundation. The raw data is available on request. The reports are all published, and and there's a very wide kind of uptake of the data and use by multiple stakeholders. And so just to give you an idea very quickly of the methodology here, we had the Wave 4 survey, right, which is the 4th annual survey conducted 2016, 45,540 adults, right, ages 15 and over. And so what we did with the panel was we took a subset of those respondents where we recontacted 2,306 of them in Gujarat, Rajasthan, and Madhya Pradesh. And so all of these were interviewed before November 8th, 2016. And so this panel doesn't look exactly like the national the national population, right? It's a little bit more male. It's a little bit older, and it's a little wealthier actually. It's more 41% over the $2.50 a day poverty line compared to 35% nationally. So, also most importantly, these folks were less financially included. So about 47% had a individually registered account in their name with a full-service financial institution, right? And so that's how we, report what is financial inclusion in the survey. Now, the way that, and we go deeper than that. It's not just about registration. We actually look at registered account as kind of the midpoint in a customer journey, right, to kind of deepening engagement with financial services. And so we can look at we can segment the population and kind of and line up these segments in a variety of ways. But essentially, we're looking at people who have never tried formal financial services, those who have tried, have accessed, those who have registered accounts, those who are active users in the last 90 days or 30 days, and then folks who are active users of actual advanced services like bill payment, they pay school fees, they make insurance payments, they, et cetera, all the things you can do with your account, right? Now, what we saw after demonetization, before and after demonetization, was we saw a big increase in account registration, in active use, and advanced use. So across this kind of full spectrum, not only did we see a larger portion of the population kind of, growth in each of these segments, right? But we also saw a larger portion of them actually converting to later stages in this journey, right? So one of the things that we've seen over the years in India is obviously huge growth in registered accounts, but not necessarily active use of those accounts or, advanced use. And so anyway, so we saw about a 60% increase in registration from 47% to 75% of these panel respondents, right? We saw a 108% increase in active use from 24% to 50%, and a 175% increase in advanced use, right? So, and so that's just of bank accounts, which of course have been driving the whole thing moving forward, but even bigger, over the last few years. Whereas the non-bank financial institutions like microfinance institutions, post office banks, and savings and loan cooperatives, those had really been kind of, all the growth had been taking place in bank accounts due to programs like PMJDY. Here, after demonetization, we saw a big increase on the non-bank financial institutions as well, right? So people are also using these at a much higher rate. So you can look at this customer journey kind of framework and see that, in each of these segments we saw growth, right? So 47% registered to 75% registered in this panel. But then also the conversion between each of these steps in the journey, that rate has also increased as well, right? So Whereas before we saw only about 51% of those who were registered for accounts actively using those accounts on a 90-day basis. Now we see 67% of the registered accounts being actively used as well, right? So we're seeing kind of, this increase in both of these ways. On the NBFIs, it looks a little different. So we're seeing, while we did see, this big jump in registration, that conversion from registration to active use is, actually decreased from 67 to 55% on that step change. So there's, so this suggests that perhaps that growth may not be sustained, but we'll see, right, as these, particularly with the post banks and how they may change. So on to kind of some of the, I think, quite interesting finding here on, so we did ask some perception questions. We're not just measuring financial behaviors, we're also measuring perceptions and attitudes around these financial services. And in this case, around demonetization itself, right? So we saw 74% of the panel respondents said they strongly agreed or somewhat agreed with the statement that demonetization was a necessary step to combat black money, right? Which was, really the way that this was presented largely to the public. So they agreed with that. 64% said that the policy was successfully implemented. 59% said that it was more beneficial than disruptive. And about 52% said that cash will be used less often for purchases in the future. So that's kind of interesting, as we look forward here, will we see an actual remonetization, right, as transactions go back to cash? So, maybe, 50-50 there, according to people's perceptions. Now, on the actual, whether people benefited from demonetization, right, we see, less than half say, agree, either strongly or somewhat, that they benefited personally. But then on the other side, the percentage who said that they had more or somewhat more trust in institutions after demonetization, so 68% said they trusted the Indian government more, 55% said they trusted banks more, but only 26% said they trust providers of cashless payments, like Paytm is one of the larger kind of mobile wallet services. So there's, so it's definitely, I think, on the, as we were just discussing, the digital features, right? The kind of, many of the preconditions are in place for the uptake of digital payments and for this to, this kind of cashless, this objective of a more cashless society. Many of the conditions are in place for that, but I think it'll take a lot of concerted effort to really make that a reality. And so as Intermedia, right, we are actually going into the field again at the end of the month for the 5th annual tracking study, and that data will be available, in 2018, so you can track kind of how this situation will develop. And of course, this is a very rich, very large and rich data set that provides, extremely detailed measurements of various financial behaviors, different types of accounts, different types and different use cases for those accounts, different services that are being taken up by the consumer over time. So there's really a lot there to offer. We publish these reports, and these are kind of our standardized indicators, but we can certainly offer kind of bespoke analysis of these data, and of course the raw data itself, if you're interested to access that.
That's fascinating material. I remember those days very well, demonetization. I showed up in Delhi with 1,000 old notes in my hand, and my car wasn't there, so I had to pay 600 of those to get a taxi. So I had 400 rupees, and I had no interest in waiting in line. So I started walking a lot more in Delhi than I expected to, but then I finally broke. And as you point out, the increase in digital usage called ride-sharing apps, got Paytm, started using that for things. So even for an old curmudgeon like me, this got me to use it a little bit more digital in my India trips too. The last of our panelists is Lauren Hendricks. Lauren is the Executive Vice President for Program Strategy and Institutional Relations at the Grameen Foundation. So Lauren, it's great to have you here. Thanks for coming on stage. You're obviously doing such great work, so please.
Thanks so much, and I'm so sorry to have been a little bit late, but excited to be here and join you guys. So as Richard was saying, I work for Grameen Foundation. We've obviously been very engaged in financial inclusion for some decades, and working in India, both partnering with financial service providers, but also working a little bit on the investment side. But I thought I would talk a little bit about the kind of the consumer side of financial inclusion and some of the aspects where we need to work on improving inclusion. I think, as you've probably gotten from the rest of the panelists, India is doing really an amazing and fabulous job on developing the infrastructure for financial inclusion, putting in place some really impressive and progressive policy and regulatory solutions, developing some really innovative and exciting technology solutions. But there is a tendency sometimes to think of solutions to financial inclusion in a very technical way. If we develop the right product or the right app, we're going to figure out how to include the majority of people. But a lot of what keeps the most excluded, primarily women, poor and marginalized populations excluded, is social norms. And so some recent survey data looking at why women don't have financial accounts with formal institutions. They're as likely to say, oh, I don't have enough money to save, as they are to say, well, my husband has an account, so I don't need an account. And if you look at the Government of India tracking, they track by household, not by individuals. But if you look at the data on women's empowerment and women's control over resources, you find that when women themselves don't control resources, they're less likely to have input into decision-making on how resources are spent, and they're less likely to have their financial priorities be met within the household. And then there's a whole bunch of other research around when women control certain resources, how they allocate those towards family uses rather than uses outside the household. So it's really very important that women be considered as individuals who need to be financially included, not just parts of households that need to be financially included. It's also important that we disaggregate the poor and rural consumers. They have different needs, different financial wants. They're much more likely to be engaged, particularly rural households, in activities that have irregular incomes and sporadic incomes, and so therefore they may need different financial products that meet those sporadic income needs. One of the things that really has become clear with demonetization and a lot of the efforts that are going on in India is that digital financial literacy is a very important piece of any larger financial inclusion work stream. So we were talking in our meeting earlier about the fact that, and I think rightly, I'll say this in advance, a lot of financial inclusion work is going towards digitizing products, so making them available on the internet or over a mobile device or over a card. And all this is going to make it much easier for people to access financial services. But because women tend to not only be excluded from financial services, but also excluded from digital services, it becomes a double exclusion for them. If you look at smartphone ownership in India, so 44% of women in India own a phone, but only 3% of those women own a smartphone. So if we're moving towards app-based financial inclusion or internet-based financial inclusion, those women are going to be excluded simply by the fact that they don't own a device on which they can access those accounts. The other issue is that they don't have the financial skills and the digital skills to know how to access those devices and those accounts. And so, again, we need to kind of turn from looking at what's the product solution to how do we make sure that women have the skills to access those products. And a lot of that then ends up being a very kind of manual face-to-face interaction. How do we make sure that agents that women interact with are providing them with the financial knowledge that they need? But also moving to a more smartphone-based solutions, we can design apps that provide information to women in a way that's easier for them to digest. So rather than SMS messages, which could be difficult for low literacy populations or for populations that speak alternative languages, you can go to video-based or voice-based financial education, which can augment an agent-based interaction. So I'm trying to push that we need to really think of solutions that can increase women's smartphone ownership. And I think there's ways that we can do that by partnering with the private sector. We can look at, I have a lot of background in Africa. There's a lot of pay-as-you-go models in Africa around solar that we could look at in the smartphone space in India. So I think there are options that can get us towards really increasing women's smartphone ownership, which can help us solve the literacy issue and can also help us solve access to products issues. I also think it's important that we think about where people are receiving their financial services now and how we can develop products and services that help us meet them where they are, rather than asking them to come meet us where our products and services are. And so I think a perfect example of that are informal groups. The self-help group movement in India has a long history, and I think over the last couple of years, as we've gotten excited about some of the new technology solutions that have come out, we've lost a little bit of focus on the self-help groups, and they're certainly not perfect, but that is where the majority of poor rural women receive their financial services now. So can we start to think of ways in which we can develop products that start to pull those women into the formal sector and build their financial identity? So also in Africa, which also has a rich tradition of informal savings groups, there's been a lot of work done with formal sector banks to start to develop products and services specifically for those informal savings groups. And what we found is over the course of a year, within a year of a group itself being linked to and having an account at a bank, 40% of the women who are members of the groups will have opened an individual account. So it becomes a pathway for women to become linked as individuals. They gain confidence when they start to interact with a formal institution in a group setting where they're already comfortable. They gain the literacy around the products and services that the bank offers, and then they feel more comfortable to take that risk as an individual. So I think it's important that we meet them where we are. Things like allowing multi-user accounts on mobile money platforms can start to make that much easier, so that banks and financial institutions can push products over payment platforms. Also looking at where women have life events and how we can use those life events to start to financially include them. I was using an example earlier. India has a wonderful system where women, if they give birth in a hospital, in a facility, they receive a stipend from the government. But the costs that they have to ensure that they have a safe pregnancy are incurred before the birth, right? They need the prenatal care. They need, if they're having blood pressure or other issues, they need to identify those before the birth in order to have a higher chance of having a safe birth. So if we can pre-finance that government subsidy so that they can use the funds to finance the prenatal care, and all they have to do in order to repay that loan is to give birth in a facility, which they want to do and we want them to do anyway. That seems like a pretty easy way to use a great system that the government's already put in place to build women's financial capabilities, to build their comfort using, interacting with the financial sector, and do it in a way that kind of is geared around a life event that they have. I think things like pregnancy savings accounts that lets women save up to cover some of the costs of birth, pregnancy savings accounts potentially linked to insurance, so that if there is a critical emergency at the time of birth, they can use some of that savings to cover those costs. So look at where women's life events are and how we can start to develop products that meet their needs there. And I think the last point I would make is how critical it is to think of women not just as consumers, but as part of the digital financial services value chain, and to start to include women in that value chain, particularly as agents. And I was talking earlier about the importance of the agent as someone who can provide financial literacy or digital literacy skills to the consumer. For most of South Asia and India, those agents tend to be men. We need to do a better job of getting women into those positions. Social norms make it easier for women to interact with women. Research shows that women agents are much more patient with other women. Some other research shows that men, when they're starting to use a digital financial payments platform, they only need 1 to 2 successful transactions to become regular users. Women need between 5 and 7 successful transactions to become a regular user of that platform. So if they go to a mobile money agent and they have a negative experience, they're much less likely to try again. So they need to go to that mobile money agent. That person needs to be someone who's willing to take the time, if they don't understand how the functionality of the system works, to explain it to them. We often see in developing countries the agent be frustrated with the woman who doesn't know how. He takes her phone, tells her to give him her PIN. She gives it to him, and he does the transaction for her. She's lost her autonomy, she's been humiliated, and she's lost the security of her PIN. Now somebody else has it. So having women in those positions, research shows they have more patience with other women, and they're likely to take the time to teach them to use the system rather than do the transaction for them. So it's really important that we see women not just as consumers, but as part of that value chain as well, and start putting them in those positions. So I think I'll end there, and I'm happy to take any questions.
That's great. I tell you, we had 4 hours upstairs before coming down here for this, and it's meant to cover the whole wide area of U.S. India cooperation on financial inclusion, and I would guess probably 60% of the conversation was on gender parity, making sure that any way the U.S. was looking to cooperate, keep this in mind, see if we can help in things. So that last point came up so strong. I thought that point about how many transactions it takes to make it sticky was one of the most eye-opening things that I heard during the session here. So fantastic to hear this great detail. Let me start off by asking, and this is probably a bit more for Preeti and for Ashwini, although, Lauren, you may have, and maybe Sam, the role of privacy. So we talk about financial inclusion, and there's a Supreme Court bench that's going to have a hearing soon about Aadhaar and whether it's going to be a valid tool for using. You see people debating privacy publicly, as should my information be stored somewhere, who should have access to it. Is that a sense that consumer privacy is a broad interest? Are people sort of rising up themselves and saying they want to control their information? Or is it really kind of driven by a small number of policymakers? So I just remember my experience having ducked into this when India was considering a privacy law, 15 years ago. And, we just didn't sense that citizens cared. I mean, I remember one speech from, a fellow who said, my name is something Mukherjee, so everybody in the audience in India knows I'm from Bengal, I eat meat and all this stuff, like how can I expect privacy? That was then. 15 years later, more people are online and things. What do you sense on privacy? Is it a grass level concern, or is it still something that's mostly debated among policy establishments so far in India?
So to your question, the information hasn't much moved. So in the sense that the broad swath of the population, large number of people still don't much care about privacy. You see very educated people all the time putting their mobile numbers on Facebook for all the world to see. There is something called settings in Facebook, privacy settings. Most people don't even care to understand what that is. So privacy clearly currently is not a concern, generally. Of course, there are people who are worried about this, especially about this huge Aadhaar project. Something a lot of people are worried that what happens if all this data goes out into in the hands of hackers or characters who would want to make a use which is not legal, which is against the people, because so far the identity theft and such kind of things are not very common, not very widely known. But with the massive project which is Aadhaar, where in case this leaks out, it goes out into the public domain, who knows what use might be made of it, because we are still finding new uses for this. And by using that number, by using that thumbprint, which itself can be kind of copied, we have technologies already which could copy that thumbprint. So where do we end up with? All the financial subsidies are linked to this number now. All the financial account-to-account transfers from the government, from the banks, are linked to this number. So how secure is this whole system? This is something which is an area of concern increasingly amongst the activists and the policymakers. But for the privacy, no luck yet. Not yet.
Well, I'd say, you've got to look at the benefits that come out of the system. So, as Ashwini talked about the direct benefit transfers, and let me throw out the future of universal basic income as well. But so the point that people have bank accounts and, are identified, with it. So, for instance, in terms of the labor force, there are about 500 million people in the labor force in India, and about 80% are in the informal sort of setting. So, I think getting this system more formalized, I think, would lead to better kind of systems for them, where more benefits, perhaps more insurance, microinsurance. We talked a lot about that as well. Very important, very necessary. So, I think the formality of a system probably will have a lot more benefits. I think the privacy should be considered seriously, but I think the greater emphasis right now is probably on cybersecurity, malware and any kind of those malicious sort of software. So I think that is being tackled very, very seriously right now, and I think privacy is to come yet. But I think it's very important, obviously, to safeguard. But I mean, another feature is, I mean, this has been a great social and financial experiment. So what do you do with like the person who's living in one shanty town and then moves to another, shanty town? How do you track the addresses and keep that updated along with the biometrics, right? So maybe kind of thinking about how this system will eventually evolve. But I mean, I think it's a tremendous, tremendous great start and a social experiment, and very, very positive on it. And as you know, just for sake of information that, Prime Minister has also released the BHIM application, which is then the biometric identification, which is linked to the Aadhaar, which links to any bank account, any of your bank accounts. So, for those who are not perhaps formally, trained, et cetera, as well, I think there's accessibility. So that's very important.
Well, the only thing I would add, because I think it's such a wonderful experiment in India, and it has so much potential, and I think along with consumers not understanding the risks, the privacy risks, they also don't understand the opportunities that having that data visible and not captured within a single institution provides to them. So I think there is, when we think of financial inclusion, it is not just about how financial products work, but how this portability of identity and data and history should be benefiting them over the long term.
Lauren, I was going to ask you on this issue. I mean, here we are talking about U.S. India partnership on financial inclusion. You've been engaged across many markets on external groups going to new countries and trying to play a role. As we talk about the U.S. being a partner for India in financial inclusion, all the things we talked about upstairs, all the great things that Grameen's worked on, how do you characterize what the role of an external country organization is? Is it drop in the bucket kind of stuff? Is it best practices and let things bloom? Can there actually be a larger sort of nationwide impact? Like, what do you think we should aspire to? Like, this is a really huge deal. We can marshal forces and bring it in a major thing, or is it always going to be, we can test things together, we can show some things that have worked, but up to others to take it forward?
Well, I do think it's one of the beauties of India is that when good ideas come about, the government is pretty good about picking them up and thinking about how to scale them. So there is quite a role in terms of kind of the innovation and the documentation of the evidence of impact, and then letting the government pick it up. So I think a big role that external players can play is bringing in ideas from other markets, doing some of the innovation, doing some of the product testing and market testing. But I have a colleague in India, who once told me reaching 40,000 people in financial inclusion in India is a hobby. It's not a job. So, and oftentimes, on the microfinance side, those are the numbers people think about. So, in India, you can't think small. You have to think scale. And when you think scale, it has to be Indian institutions and the government.
Yeah, that's great. Sam, I have kind of a two-parter for you. First, I mean, the data you pulled together on this, clearly, I would think it would be interesting to political leadership. I mean, has the government of India, have you shared, do you plan to, or how does that work? And related, I mean, with the follow-up that you did post-demonetization, I noticed it was 3 states, all led by BJP. Is there a reason, Rajasthan, Madhya Pradesh, and Gujarat, I think it was, right? Is there a reason those particular states, and do you think that might have, can you talk about how those 3 kind of got pulled out of it? So always interested in the political overlay for such cool information from a government program.
Yeah, sorry, the first one?
Just the government of India. I mean,
oh, right.
You pull this data together, are they?
Yeah. We actually the RBI uses our data quite often for their own kind of internal analysis and their own reporting. So they'll definitely be looking at this. This hasn't been shared with them yet, so this is new. But it will be.
Showing it publicly?
Yeah,
hey,
exactly.
How about that?
First place. Yeah, this is
It's
kind of a preview actually. So there's a lot more in there. This is kind of the top line, findings. But yeah, to the other point about.
The BJP states.
You're right, BJP states, right.
Was there something about those 3?
Yeah, so this study actually had a couple other objectives that kind of determined those. So it was the payment banks, right? So initially we were trying to get kind of the before and after on the payment bank rollout, which was Rajasthan, and then Rajasthan first. And we were actually going to try and compare with Gujarat. But then later we found out that Airtel was basically rolling these things out everywhere, pretty much all at once. And so it was kind of like really trying to really, get ahead of the ball and but anyway, so it came out to be, it had a couple other objectives that determined why those states. It wasn't related to BJP. It wasn't based on prime minister's home state or anything. But it essentially became this kind of before and after look at demonetization. Yeah, and payment banks really dropped out because I think we were, we didn't see that big of a change in terms of the payment banks. I think it's still a little bit new, and we're still working out how to really ask about it, to really pinpoint, really get people to differentiate that that service from the existing Airtel services, et cetera. So yeah.
Well, with that, happy to open it up to the floor here. We've got about 30 minutes. Presume there's always some good questions with folks that show up at CSIS. So raise your hand if you don't mind. Please let us know your name, your affiliation, and if you could make it a relatively brief question, appreciate that. Yeah, we'll go to the left side over there. Name, affiliation, and please try to keep it relatively brief if you can. Thanks.
Yeah, thank you. My name is Sachin Garg. I just completed a PhD in Big Data and Public Policy from George Mason, where I was looking at India and land records modernization. And my question is to Samuel. So this is interesting, like taking upon from Richard said about the fact that you looked at 3 states which were BJP ruled. So did you look at interstate comparisons? Because that way, one big variable about the political side of it sort of goes away, and you can actually look at how state development per se impacts take-up of these digital technologies.
Database, so watch out.
And I also had another point about the privacy issue. When I was researching, I found one of the things that privacy is actually very contextual. So I think I would like to know what is the policymakers thinking about specific policies keeping in mind India's unique socio-cultural norms. How are the policies on privacy going to be impacted by that? Thank you.
So cross-state comparison of data.
Yeah, cross-state comparison. So the survey that we run annually in India is 45,000 sample size, right? So that allows us to, not only get extremely accurate, statistics for the national level, but as well as, good representation at the state level for most states. A few of the smaller ones we have to kind of cluster together. So there will be that opportunity, I think, to do that cross-state comparison in when the wave 5 data comes out, right? And we can compare kind of year on year that change. But with this, probably not, because we just have this smaller sample size, and these states are, fairly similar. I don't know, but I'd definitely be interested to hear your ideas on how we might dig into that.
Anything additional on privacy, contextual you mentioned, but I think that was more of a point than a question, wasn't it? Or
Yeah, I just want to know if there's the thinking in the policy, larger people who are thinking of privacy and incorporating those aspects or not. Are we going to go the completely western way of thinking about this is PII, that's all?
So the current, as far as the regulations go, the thinking is again the NPI versus non-public information versus the public information. So the financial institutions surely have those policies where they will not share, and it's not easily available. But for the social and cultural context of India, it hasn't come so far into the regulatory space or the legal space yet. Surely there is a case to be made out because the cultural and the religious factors do play a part, whether we like it or not, whether we say we are pluralistic or we secular. With all those things, we still have the case in Supreme Court whereby there is a case going on with a full bench hearing it and yet to pronounce a judgment as to whether a particular religious practice is correct or not. So in those contexts, there could be some case for what you just mentioned, but so far not there in the law. Thank you.
Hi, my name is Aman Charani. I'm a student at the University of Georgia. So you guys touched a little bit about privacy or cybersecurity. There was an article that was in like Brinkage or something like that, but they talked a lot about with the rapid, I mean, you know, the number of users that are being registered is at an exponential rate, and there's worries that the government may not have the capacity to protect that information, and cybersecurity and threats like that are very real. You know, you touched a little bit about KYC and like us registering people with the Aadhaar, but I don't know if we can register people fast enough to verify these accounts. So are there initiatives being taken to secure these accounts and to address the threat of cybersecurity and financial crimes, or is that just an abstract idea that hasn't really crossed the minds of people in the industry yet?
I think, just led by the RBI, it's certainly something that's been taken very seriously. And I think all the banks have very, very strong teams deployed on this. Of course, sometimes issues come up with partners like, the ATM software, et cetera. How do you sometimes, it's not like the bank system, but the partnership. But I think in terms of scaling up, we are seeing 30% growth, and year on year. And then, we are correspondingly scaling up the operational base as well. So you really have to, keep that growth pace up. So it's a very, very high growth point. And then, as I said, the fintech kind of focus. So whatever expertise is available in India, as well as Silicon Valley, et cetera, bringing that in to really make sure that the systems are robust. So I think those are kind of a couple of things that are going on.
Yeah, I'll just add a couple of points here. See, on the bank side, the cyber part is fairly well taken off. In fact, a couple of practices which are already implemented in India for some years, I still don't find in the United States. For example, this one-time password, which comes on the mobile every time I do a transaction in India. Still for my Indian account, it still comes to me. Similarly, the cards we use, the ATM or debit cards, the chip-based cards have been there in India for the last 4 years, 5 years. I still don't find that in the United States. I'm very scared every time I give my card to any dealer for a swipe, because the magstripe is the most insecure way of transacting. And those have been there for 4 or 5 years. It's mandatory. There's no choice given to any bank not to issue. So on the cyber side, the banks are pretty good. Of course, there will be instances, as she mentioned, some partners could sometimes have some problems. On the other side, on the Aadhaar side, which also probably you indicated, one good thing was when this came up, it was, though the initiative was a government-owned initiative, the body was government, but the basic idea came from a gentleman called Nandan Nilekani, who was one of the leading lights of Infosys, which is a private sector company. So they had the idea of cybersecurity in their minds from the beginning, and that was built into the system. So far, no hacks, no breaches have been reported. This initiative is already 2-3 years old. We have almost 1 billion registrations. So I'm not saying it is impenetrable or it can't be done or something, but the best practices, or at least some of the good practices, have already been built in. So we are fairly safe in that sense. There is never an end to cybersecurity. It's always a work in progress. Hopefully this will go as it scales up. It will be better as times to come. Thank you.
Fortunately, one of the ministers did say it was impenetrable, which for any hacker in the world is like a right, like go for me, go for me. Yeah. So the fact that 6 months after that statement, there still haven't been at least publicly acknowledged any major hacks, probably a good sign.
Hi, my name is Kajal Joshi. I'm currently interning at the Hudson Institute. My question, is just general. You talked a lot about, how the government is accelerating its rate of developing financial infrastructure in the country. Given that currently to service a population of around 1.3 billion, there's only around 2 lakh ATMs, just to put that in perspective. And given that literacy in the country is so low, given that computer literacy is even lower than the level of actual literacy, what steps can banks take on their own account to ensure that the Digital India initiative gets as much traction as fast as possible?
So just, broadly, so let's say in our case, we have about 1,000 branches plus, but then we have these 50,000 business correspondents. So in terms of the financial infrastructure, so, and these are like in various, spread out throughout India. And so what we are trying to innovate is with them what could be like handheld ATMs, micro ATMs, phone solutions, etc., so that the access to the accounts is through a very widespread network of players. So it's not just the formal infrastructure of the branch. So I think right now the technology angle is so strong. So in some ways, we call ourselves a technology company with banking services. So I think that will be the way to go. Of course, with the energy aspect, we were discussing earlier that are there some alternatives? I think somebody said very interestingly using the force of gravity for the ATM, et cetera, those kinds of issues. But at the same time, even energy is being kind of looked at in a serious way. But I think kind of the sort of disaggregation of kind of the touch points, the point of sale machines have gone up exponentially. So just things that can help disaggregate to where the people can reach the banking services. I think that actually is kind of needed because, for instance, let's take the Northeast region, et cetera, or, we're trying to really debate the need for the physical infrastructure versus the digital, and then bringing in at the same point, let's say MSME financing and getting that all digitized, et cetera. So, we're really using all the methodologies that are out there right now.
So digital literacy is low, but mobile literacy is not low. Yeah. So to that extent, in case we are able to leverage the mobile platform, which is what most banks are trying to do, there is a case for such a large population which already has a mobile without the banks giving it, about 700 odd million. So that is something which is most applications these days are being developed for the mobile, on the mobile. And also, as she mentioned, these business correspondent or facilitators, these are people in that area. And they've been trained by the banks and they have handled devices which enable small payments, not more than maybe 1,000 rupees, small receipts also for them, and they all enable accounts to be opened. They have a camera with them and a biometric ATM. So it's like this is still at a very low level, maybe only about 2-3%, but this is the way at which scale will happen and the banks can handle. Otherwise, with 150,000 branches across India, surely the banks can't handle all this on their own.
Lauren, with your rich international experience too, I wonder if you've run across any fun examples on what banks have done in this regard too, outside of just the U.S. India space.
Yeah, I think, again, mobile technology is making things possible that, we never imagined years ago. But also, it is about finding what touch points you already have with people and trying to layer services onto that. So, an example in Burkina Faso, where we work with women's savings groups, is having developed short videos which you can play actually on a feature phone. And so every agent has been trained on facilitating a conversation around these videos. So the videos ensure that everybody's receiving the same information, and the role of the person is to facilitate a conversation after they've received that information on how they can then use that to access financial services. So it's very low tech. It involves putting a little memory chip into a feature phone and showing a cute little video, and it's less than 5 minutes, and then facilitating a conversation. But so there are ways, even in pretty low tech environments, and Burkina Faso is one of the lowest tech environments out there, where you can still use technology to facilitate financial education. But I do think it's important that, combined with that technology, you have a person that you rely on that can help you understand how to use the information that you've received.
If you look at, like Kenya, for example, as being a leading country in expansion of digital financial services for the poor, right? The Safaricom business model of establishing this agent network that really trained people on how to use mobile money, and solved that last mile problem essentially. That's an oftentimes overlooked key feature, just the kind of Safaricom business model that was implemented there with the mobile money agents in that case. Now, of course, that's also being done with agent banking, everywhere in Kenya included as well. Also, so it's a big part of it. But I think logistically and operationally, getting it right, it's not always been replicated everywhere, right? So that kind of Safaricom example was a way that they really, the actual just management of that agent network, right, was crucial. So I say that. But also on the financial literacy point that we touched on, in last year's survey, we kind of ported in the S&P, the kind of global financial literacy kind of index that we used, and so we produced that for the 8 financial inclusion insights countries. You know, we see generally, like in India, and in most places nowadays, basic numeracy is quite high. So people, know how to add, subtract, multiply, divide. They get that. But but financial literacy is much, much lower, right? So understanding what, compounding rates of interest and even what interest rates are, right? For example, is much lower. So this is, so we see this as potentially kind of creating a risk, a risk factor around, when you combine it with privacy and security questions, the prevalence of sharing PINs and, sending your child down to the agent to cash out right from a mobile money account, giving them the PIN number or whatnot. All of these, and combined with kind of the lower level of real financial literacy and understanding of how these financial products really work, right? This is, definitely one of the risk factors that comes along with the rapid expansion of these services to the population. And so, again, with the agent networking and the financial education piece of it is really crucial, and especially for addressing the gender gap as well.
So just to add one innovation that I did want to mention earlier. So, we've developed a technology called SIM se Pay, which is like pay by SIM, but this is for the non-smart phones, and it's a wafer-thin layer that you attach to your SIM card in the non-feature phones, and that allows you to use, the US SD systems to access payment mechanisms. So I think we talked about frugal innovations for financial inclusion, the FI for FI, and maybe I personally feel, of course, India's, at kind of a pinnacle, perhaps even to innovate for the world, but then we also want to throw the challenge open to the world to, try to find some of the solutions that we talked about for, some of the connectivity issues, some of the non-smart phones innovations. Mm-hmm. So I think those are some of the things that we're working on as well. And so this product we're actually giving to the district cooperative banks because they don't have access to mobile banking licenses, so they can use that with some of their customers. Thanks.
Yeah, and this is an innovation that started in Kenya.
Yeah.
Hi, I'm Amrit. I represent an organization called Pixera Global. I'm visiting from India, and I consider myself an eternal student. So I have a question for the Indian banks, and thank you, Lauren. That was really including Indian rural women into financial literacy and just getting them to have other services other than opening a bank account was really insightful. So my question is to the Indian banks that, do you think that if you were to include women in services like farming loans, etc., it would be beneficial to introduce a special rate of interest for them, which is different from like how you have a senior citizen interest rate?
So, make a business decision on stage. So to answer your question, actually, State Bank of India has had policies for women for a long time. We had something called a Sri Shakti scheme long back, about 15 or maybe 30 years back. And it's different variants where the scheme was such that the rate of interest was lower, processing charges were lower, some of the terms were relaxed. But our experience has been it's not been very successful because ultimately, more than the rate actually, I would think that the key question here is how does a woman get to use that product? How is she trained enough, or does the ecosystem allow her, as she was mentioning, familiarity with the product? Is the overall ecosystem allowing her to come and do that, whether it's a farming or an industry or a small business? If all of these things are okay, then the interest rate, not so material. Because the interest rates are in general in line. We have experimented with this lower interest rates. We haven't had much success with a lot of people coming. Generally, the same male guy would come and he would bring his wife to put it in her name just to get a 2% benefit. That's our experience on the ground. So I don't think the rate is going to make a material difference. It's the training part, the enablement part, which is more important in my view. Thank you.
So a couple of initiatives, I agree, and a couple of initiatives from our side. Perhaps I think we are focused, we were saying, to actually, do initiatives to push up the focus on women because, let's say, theoretically, we haven't had that focus on them that's needed. And so what we've done is we've opened some women's only branches. We call them Yes Grace branches. And I mean, it's an experiment we're doing. We feel that perhaps that might, lead to a certain kind of customer base and this, the sensitization that Lauren talked about. So that's one thing we're doing. And the other one, as I said, the specifically focused SME policy and the loan that we give out to women SME businesses. I think that helps because as you know, all the figures, I think there's like 25% of SMEs are owned by women, but only 3% or 8% of the credit goes to them, and like, as you were saying, that the businesses, get registered, or the loan goes in the name of the gentleman. So that, and then in addition to that, we have something called Yes Head Startup. Again, it's a program to help startup entrepreneurs. So we bring together all of our partners, and then we do women-specific programs, and we're doing that with a couple of embassies. I was mentioning the Embassy of Israel as well, where programs are very specifically for women entrepreneurs. So I think perhaps those initiatives to build the ecosystem is where we are focused on.
My name is Glover Cabe. I work with Fidelity Investments. My question is around shadow banking. I worked on the ground in Hong Kong and Shanghai for a number of years when the rural community was coming more into the urban centers. We ran into a problem, it was a different multinational then, but we ran into a big problem where they were unengaged because they had leveraged products that were fairly unsavory at the time. So how are you re-engaging your base in India with knowing that it's the second largest shadow banking operation in the world?
Thank you.
So to your point about India being the second largest shadow banking, I have a different opinion on that we do have. We have an informal system of financing. It is different from what the shadow banking in China is. I was posted just before coming here to Hong Kong, and I was dealing with China. So this was surely a major item there, and in the sense that the same company would have loan from the bank, and the same company to expand, because there's a limitation on how much loan you can take from a bank, it would take also from the other companies, so-called informal, I mean, these are corporates. These are not some people who are in the informal sector. They are properly in the corporates, but yet those so-called wealth management products will be leveraged, and ultimately the company would get twice the amount of loan, one from the bank, another from another channel, which in turn could have been financed by the bank itself. So in the sense that it's a huge thing. It's almost, the shadow banking was almost of the same size as the formal banking sector. So there was a challenge. Nothing like this exists in India in terms of the people having access to the formal shadow banking, as it is called. I would differentiate between the two countries. We have a large informal sector, money lenders and all kinds of players who are there, but they were on a smaller scale. On a bigger scale, it is still the banks which are almost like 80% of the market. We are now moving towards the bond markets and towards equity, but still the banks continue to be 80%. So the shadow banking problem per se is not a major issue in India.
Yeah. We have a microphone coming over.
Hi, I'm Divyanshi from Center for Global Development. And my question is to Lauren about implementers of direct benefit transfers have sort of shed light on how it's taken, direct benefit transfers have actually taken away some authority and autonomy from women and sort of let it on to the household more, which usually is usurped by the men in the household. So are there policies or conversations surrounding this issue from from banks or from the government side that could sort of mitigate such a problem?
Yeah, great question. And we had a conversation earlier today, kind of on the similar issue around the issue of when you kind of move your money from under the bed into a mobile money account, maybe you lose the privacy or the secrecy that you had around that money. And I think similar with the digitization of benefits. to me, the challenge there isn't the technology or the moving into the formal sector, it's the underlying household social norms issues, which is that women don't control resources and that women have to hide money, right? And so the solution isn't to teach them how to hide money better. The solution is to facilitate conversations at a household level about how decisions get made, how resources get allocated, how households handle money, and about the relationship between household members in that situation. Now, the problem is it's relatively easy to develop an app that can help women hide money. It's much harder across large states in India to facilitate household by household conversations about how households manage and discuss money. And that's not an India specific issue, right? That's, here in the US, and that's every country in the world where men and women have those difficulties. India is one of the most difficult markets in terms of intra-household gender dynamics around control of money and control of resources, absolutely, for sure. But in my opinion, there's not a high-tech solution to that. It's a solution that needs everybody to devote time and energy to having conversations. And it's not just the household, right? It's the community, it's the larger household, it's the mother-in-law, it's everybody's conversation about what rights women and what access women have to resources in the household and to decision making. And I also think sometimes we ascribe more evil intent to men than they actually sometimes have. And I will say, we just did a project in India around nutrition, so something totally, in Rajasthan, and one of the issues was, women were eating less and their food was of less nutritional value. And part of that was men and women didn't eat together, right? And so women prepared food for the men ate, and then children ate, and then women ate whatever was left over. And that was the way they were taught by their mothers, and that's the way their mothers were taught by their mothers. And their husbands actually had no idea that they weren't eating. I think, they assumed that women held some of the food back. And it wasn't until part of the project was encouraging families to eat together. And it wasn't until they ate together and the husband saw, oh, she's eating this much and it's only greens and rice and she's not getting any meat, but she's labeling my plate with this, that actually there started to be more equity within the household around nutrition because he started to realize that she wasn't eating. And so some of it is, men have different ideas about women's role in the household, but some of it is needing to make more transparent what everybody's roles are and raising men's awareness about what it means when women don't have equal access. So, see, you're not all bad. Sorry.
Yeah, up here at the, we have a microphone coming up. Hold on, thanks.
Yeah, I'm Sailesh, representing Exim Bank of India. I have a question for Sam, actually. Of late, I'm reading that the uses of digital currencies and all is getting reduced. From the time you did the study post demonetization and all, and recent numbers are getting reduced. So I just wanted to, have your study covered that willingly the Indians are moving wants to move towards the digital currency or not? Just, have you covered that part, or is it just by force we did it during that demonetization period? But are we really,
Yeah, that's a good question. and I believe that we actually have some data on that point, on, beyond kind of level of demand for digital options, right, and level of interest, essentially, right, that people want them or not. I don't have that ready for now, but you can look for it in the report that we'll publish, the full-on version of it. Yeah, but yeah, so I'm pretty sure. Yeah, we have some attitudes to that, but I didn't get a chance to pull that in yet. So sorry. I did want to just speak to the point. One of the research questions that we're working on answering is around the individual accounts, right? And so when women have their own individual financial accounts, how does that change the power relationships within the household, right? And so we have our hypotheses that this will, give women more voice and decision-making power around household budgets and spending of household income, right? But that's definitely, but so we're working on kind of testing that and seeing to what extent that's borne out across different segments of the population and whatnot. Yeah.
Like a product answer to that, we were talking about, we had Western Union in the room earlier, about the intra-remittances. So I think that is going quite well on the digital platform. Obviously, people find it more convenient and low cost to send it. So I think that, and then, when you see more benefits coming to you through the formalization of the banking system. So I think, when we have more insurance systems, et cetera, then I think people, will be obviously more oriented towards it. But I am seeing a trend. I mean, we talked about, the push on the smartphones or, enabling the non-smartphones. So I think that, and we are seeing a trend. I mean, people are now aspiring, everybody wants, to have the smartphone so they can WhatsApp and access information. So it's a complex country, various, sort of dimensions there. But I think the end sort of agenda is, that more money in people's hands, more benefits, and less leakages through the system, etc.
Yeah. But overall, but to go back, overall there is a low level of awareness of digital options, right, that we see. So we know, for example, that accounts that were opened through the PMJDY program all are, by law, are supposed to offer debit cards with that account. And we ask people, does your account offer a debit card, or a mobile app, banking, a website, right, that you can access your account? Most people, either answer no and get it wrong because, in fact, these, so we're seeing a much lower level of awareness of digital options than you would, people aren't aware of the digital options that are there, and they're not, taking them up. So, whether they really want them, I think we do have some additional data on that. But so far what we've seen is that, especially before demonetization, right, this was, a cash economy essentially, and people weren't really using or even aware that their account was digitally enabled.
I would also give some credit to the large Chinese mobile companies for financial inclusion. Xiaomi, Redmi, Oppo, and maybe Huawei also, bringing the smartphone cost down below $100 for most Indians. They are among the top 5 companies in the Indian market space for mobile. So some credit to them also for financial inclusion.
Then to add, I guess, Jio to the mix as well, because of the new data packages that Reliance, as a new data provider, has come to the market. It's exciting. I mean, people are excited about it.
Well, that brings us to the close today. Financial inclusion, it's an area where there's so much happening in India. The United States is looking for those angles. We heard a few of them upstairs in the private session. The U.S. government, U.S. institutions have gotten engaged. But anytime you see a movement this big, there's always other opportunities for commercial engagement, for government engagement, and for other organizations, foundations, and such. So great discussion upstairs, a terrific discussion down here. Please join me in thanking my co-panelists, please.